Breaking news. The U.S. has just imposed heavy tariffs on its three biggest trading partners, sparking global economic concerns. President Donald Trump has announced a 25% tariff on Canadian and Mexican imports and a 10% tariff on Chinese goods. This decision has sent shockwaves through global markets. Financial experts warn this move could lead to higher prices for American consumers and retaliation from other nations. The stock market is already reacting, with increased volatility and investor uncertainty. The tariffs are expected to affect a wide range of industries, from automotive to electronics, and even agriculture. For instance, the automotive industry, which relies heavily on imported parts, could see a significant increase in production costs. This, in turn, could lead to higher prices for consumers looking to buy new cars. Similarly, the electronics industry, which sources many components from China, may also experience price hikes. The agricultural sector is not spared either. American farmers, who export a large portion of their produce to these countries, may face retaliatory tariffs, making their goods less competitive in the global market. This could lead to a surplus of produce in the U.S., driving down prices and hurting farmers' incomes. The ripple effects of these tariffs are far-reaching, affecting not just businesses, but also everyday consumers. What does this mean for you? Everyday essentials like cars, electronics, and groceries could become more expensive as trade costs rise. The increased costs of imported goods will likely be passed on to consumers, leading to higher prices at the checkout counter. This could strain household budgets, especially for families already struggling to make ends meet. World leaders are pushing back. Canada calls this an attack on fair trade. Mexico warns of serious consequences for the U.S. economy. China is preparing countermeasures that could impact major U.S. industries. These countries are some of the U.S. largest trading partners, and their responses could have significant implications for the global economy. The manufacturing sector in the U.S. could also be hit hard. Many factories rely on imported raw materials and components to produce their goods. With the new tariffs, the cost of these materials will rise, making it more expensive to manufacture products domestically. This could lead to higher prices for consumers and potentially lower demand for U.S.-made goods. With global trade hanging in the balance, the world waits to see if this will escalate into a full-blown economic landscape is shifting rapidly, and staying informed is more important than ever. Keep an eye on this space for more updates and in-depth analysis. Thank you for watching, and stay tuned for more breaking news.